Colonel Dillon, tell us, how can we help you?
Yes, ma'am. Good evening, everybody. My name is Colonel Dillon. I have taken my early retirement from the army.
Okay.
My problem is that we get a pension. I retired at 48.
Mm-hmm.
I have approached banks for home loan as well as a personal loan.
Mm.
But I have been told personal loan was clearly me because being a retired officer, although I'm 48, 52. Now I'm 52 now. But I was denied personal loan as well as home loans were also, the banks are not very keen to give me home loans as well. So my doubt is that our pensioners with age less than 55 years and salary of about 50 to 60,000 rupees pension, are they eligible for home loans? This is my doubt.
You draw a pension, are you eligible for a home loan? Harsh, what do you say to that?
So, Colonel, I think that's a very relevant questions that you have raised. I mean, I think the key issue is that at a very young age, at a relatively young age, the pension has started. Now, whenever any bank gives any loan, and if you talk in the context of home loan, there are three things that the bank would look at, apart from, of course, looking at the property, which in your case hasn't come to. First is that whatever income you have, how reliable it is that it will continue in the future. That is one. Two, whether this income, when it continues in the future, will it keep pace with inflation? Okay, those are the two. And how, what are the chances that the person taking the loan will still be there at the time that the loan maturity is over? Now, obviously, in a case like yours, the pension is coming from the government. So, I think the consistency of that coming in, the reliability of that coming in the future is very, very high. I think it is the other two features, the feature on whether it will keep pace with inflation. I think it does increase, but it does not keep complete pace with inflation, which a normal working salary would. And third, of course, which is a much bigger problem, is if you look at a home loan, typically to be eligible for a big enough loan, you would need to take, say, a 15-year loan. Now, the chances that, the bank would need an insurance policy that if something happens to you during those 15 years, their loan would be repaid. And insurance at this age is either not available or it will be available at a fairly heavy cost. And that is the reason you have found.
So, Harsh, what can Colonel Dillon do in that case if he does want to buy a home now,
right,
and he is drawing a substantial income, which, like you also mentioned, is a benchmark to inflation in some way, because there is a dearness allowance revision that army officers like him and government officials are eligible for.
Correct.
So that the pension is revised. How can he go opt for that home loan?
So, I think, Colonel, the good news is that it is not as if that you just can't get. You will be in a position to get a home loan. The quantum will be not very high because they will assume, say, 5 years. Now, in 5 years, because the EMI is very high, because you have to repay the loan in 5 years, the quantum of loan that you will be able to get might not be up to your satisfaction. So, the way in which most lenders are able to do it is that if you take this home loan in conjunction, say, with your children who are younger and who have an income, then they will consider your income, your children's income. It also allays the concern in terms of who will take the liability.
So, the children need to come in as a co-borrower?
It will improve the eligibility. He can get a loan on his own, but if he is able to, say, get only a 5-year loan.
So, Colonel Dillon, these are your options. Either opt for a short-term loan, one that, that you will be able to repay in 5 years or so, though the loan quantum that you can be eligible for will be far, far lesser, or else get one of your children to join in as co-borrowers. That will up the amount of loan amount that you can actually get from the bank. That will also enhance your loan eligibility in the eyes of the bank.